The question that is on everybody's mind is this 19% correction, the bottom for Bitcoin. Are we already at the bottom and now we're just going to reverse towards the upside? In today's video, we're going to be focusing about that and the possibilities as to where that bottom could be if this support lapses with price going to the downside. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward on Bitcoin, and let's dive right into it. So historically, we do see a average 22% correction. That's the historical average across the cycle. We get 23%, we get 20, 22, 22, and this is the deepest correction that we've seen in the cycle thus far. 23.8% correction, eclipsing the early 2023 correction that we saw. This is still below average, but we are pushing towards that 22% corrective average in the cycle. However, we've seen a fantastic rebound already, so we're going to be talking about if this is indeed the bottom. And one of the key things really for Bitcoin is to weekly close above 61,300. You can see that this weekly close here, when we saw a weekly close above this same level, we managed to rally and revisit the 70s, the very low 70s. So right now we are actually in a very similar price predicament to where we were back here just after the halving, where we downside wicked, managed to weekly close above 61,300 and then reverse towards the upside. We've also downside wicked as well on this pullback and still holding this support. So this is a key support to continue to hold, because generally speaking, this is that major demand area where we've seen rebounds. Here a rebound to the 70s, here a rebound to the 70s, and here holding here, and we're going back to the low 70s once again. But let's just suggest, or at least try and ponder, where could this pullback take us if we indeed see an average correction of 22%? Because we are below average, in a below average retrace for the time being. 22% is the historical average across the cycle. If we were to see 22% in total, then that would get us to 56k, which is, interestingly enough, that would be the bottom, the double bottom area of the previous corrective bottom as well. So that would be a double bottom, and I think one way, one healthy way and sustainable way where we could potentially get that double bottom in the downside wick is if we were to downside wick once again. So let's suggest or think about weekly closing above 61,300. If we were to downside wick next week into 56k, we get that double bottom and we manage to tap into this liquidity, garner those buy orders, and hopefully manage to recover back above 6130 in doing so. So essentially a downside wick and then candle body close above here. That's just one scenario should we indeed have to see a average correction once again. But let's talk about even deeper one. So what if we were gonna see a deepest correction in the cycle, or at least equal the deepest correction in the cycle of 23.8%? That would see us go to 55k. We would eclipse and go lower than this downside wick, just a little bit lower in fact, but still 55, 56k would be that demand area. Is that a possibility that we see the deepest correction not too long after already seeing the deepest correction this cycle, just after the halving? So that was around late April, early May. We saw a record-breaking deep correction in the cycle. We eclipsed the early 2023 pullback, and it took a year and a half for that new record to come in. So to now talk about another record and another deep retrace occurring only a month and a half later, I think that's a little bit too far-fetched. I don't think we're going to eclipse that retrace depth for the deepest retrace in this cycle. I think it would be either this being the bottom already, or a slight additional pullback, which isn't necessarily required, because we've satisfied key requirements in terms of holding the base here, grabbing that liquidity, and I think we're all really just prepared for that consolidation towards the upside, and I'll show that in the next charts as well. And before we do that, or perhaps we can actually skip to that very quickly, because historical reaccumulation ranges. This is the reaccumulation range low, and we tend to hold this level, so any downside wicking is fair game, but we've already seen that downside wick. And that downside wick is really important in garnering that buy side pressure. And we always see downside wicks at those key supports. So the fact that one has already occurred, that may be the bottom of that corrective period, because we don't see many long downside wicks form. It's only really just one downside wick forming. Here at the bear market bottom, we had 3 of those downside wicks. But sometimes, actually oftentimes for all of the cycle, just one downside wick below the range low support was enough to garner that buy side liquidity and reverse towards the upside in this range. So we're either at the bottom already or just very, very close to it. And so wrestling for an additional 1% or 2% towards the downside really isn't necessarily worth it if we're risking it not happening at all. Essentially, this is, for me, the post-halving reaccumulation range, and the reason I called it the reaccumulation range is that I want to be reaccumulating, and the way to be reaccumulating this is at the range low support of 6600 and any downside wicks occurring below there. So definitely bargain buying opportunity right now, not only in the retracement depth, but also in the duration of this correction. We are slowly approaching the 42 day corrective length. So it's not exactly 35, it's around 40 at this time, because the weekend, only a handful of days remain in this week. But we're already on the longer side. An average correction is 42 days. This is already 40 days. So the longer a correction, and the longest one we've seen was 63 days, the longer a correction, the closer we are to a bottom. So retracement depth, really we're very, very close to the bottom, if not already there. And in terms of duration, also this is one of the longer corrections. So we're also satisfying a very 2 pivotal principles, that we have to have a long correction and we have to have a deep correction, and we've already managed to satisfy both of those quite well. And the last thing before we wrap up this video is historical point of rejection here, promoting a rejection every time. Major resistance now is acting as a 4-month support. Not only that, we're seeing a diamond shaped reversal here, where we were forming lower lows here and now higher lows here. Not just higher lows in the downside wicks, but higher lows also in the candle bodies as well. And if this persists, then this is going to be a really good sign for premium buying behavior. A higher low is always a good sign of premium buyer behavior in graphic form. This is exactly the sort of higher low that we need to be able to combat the lower high that we've seen develop here. And if we see a lower high develop here and a higher low develop here, then we're getting a bull flagging structure within this sideways range. And so if we get that bull flagging quality inside this range, then that's going to only enable price compression, which is going to kickstart the clock on this sideways range having to resolve itself with a breakout into whether it's the upside or downside. But history is suggesting that we're going to break out towards the upside, because historically we tend to consolidate for 160 days or so after the halving before breaking out into the parabolic phase of the cycle. We're in the thick of the post-halving reaccumulation phase. We're waiting for the post-halving parabolic upside phase. It's this post-halving reaccumulation phase that prepares Bitcoin for the next parabolic phase. But we're only 70 days. We're only 70 days in this phase. So really just halfway. we're halfway through this phase essentially. So if you've managed to stomach this 70-day period of consolidation after the halving, then I'm sure you'll be able to stomach another 70-day period, maybe even 80, 90-day period. Because the longer we consolidate here, the better it is for the cycle. We're still in an accelerated cycle by 160 days or so. So an additional 70, 80, 90 days, that's only going to be beneficial for Bitcoin cooling down sufficiently before it's inevitably prepared and ready for the next phase in the cycle, the parabolic upside phase. Thanks so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. Check out the top right hand corner video for more, and I'll speak to you in the next one. Speak to you soon.